All right, welcome you guys. This is Eric here with Investor Central Club. I've got Max. You guys know him as Unusual Markets or Trades and Gains. We've got our Fed Jackson Hole reports coming up soon, so we're got some movement in the markets today, and I want you guys to be aware. We do have a few earnings to talk about, mostly just Walmart tomorrow. We're gonna review a little bit what happened today with Target and Estee Lauder, but yeah, I mean, not too much action going on. I think everybody's waiting on the reports from the Fed. And I want you guys to let me know, what do you think's about to happen? Are they going to hold rates steady? Are they going to drop the rates? Are they going to raise it? Your guess is as good as mine. We'll give you guys our theories as to what's going on in a bit. But yeah, let me know if you guys are here as well. As usual, go ahead, comment stacks in the channel, in the discussion box. And as always, please give us a like. That way we can make sure that we play this YouTube algorithm game. All right, Max. Let's start off with you. I want to hear what your thoughts are on this upcoming Fed meeting.
So basically, the long and the short of it, inflation's still running hot. Like we're well above 1% of a 2% target that we were looking for in the first place. The job market is actually weak compared to people thinking it's strong. We only added 73,000 jobs in July, and that's the lowest in the last 3 years. Markets are betting big, 85% odds of a September cut. I feel like that dropped after Fed minutes today to where we probably won't get a cut in September. If we do, we'll probably get a ton of buyer's remorse like we did last year. And then political pressure. So which is kind of making things awkward because typically everyone would know what to expect. He's going to go up there, say, we're going to wait and see. We need to make sure that this data is consistent over a period of time so we don't rush into a decision. Now, the dilemma is he going to fight inflation or is he going to rescue the job market? And that's what leads us into Friday, which is basically Jackson Hole, but from today, our Fed minutes. Jesus. Okay, I don't need the background noise in my own voice. So basically, the key takeaways from Fed minutes today, they're going to hold rates steady at 4.25 to 4.5%. Patience is the name of the game. Inflation is stuck at 2.5 to 2.7%, and tariffs are not helping bring that number down at all. The labor market, again, it's slowing. Unemployment's at 4.1%, but wage growth is also softening as well, which is never a good sign. Wall Street is begging for cuts. Hedge funds, AI stocks, and stable coins are now flagged as risks, by the way. So they got together and decided that's some of the more risky areas right now. And basically, the Fed's trapped. Inflation's not dead, jobs are softening, and Powell doesn't want to go down as the guy who cut too soon, like he did last year. But September could be the tipping point, is what's being told. And yeah, expect volatility leading into Friday. Bond yields may stay choppy, and equities will be vulnerable if Powell stays hawkish. And watch small caps and cyclicals. Rotation could pick up if cuts do get delayed. So that's really like the big takeaways from that 30-page boring ass document that they release. And it's a brutal read, but it was at least semi entertaining this time.
Yeah, I totally agree. At the end of the day, there's a lot of different data numbers that you kind of have to look and read between the lines. I understand that our CPI report came out a little bit cooler, but PPI came in hot. At the
Mhm.
end of the day, there's this theory and the belief that tariffs, the full impact of tariffs, have not truly been felt just yet. While it is being reported in some of these companies' earnings and their forecasts, you got to remember that at the end of the day, when the tariffs were first put in, a lot of companies front ran that and basically added to their inventory as much as possible and ate that cost early on. So early, they still, might have spent extra money on getting a better inventory, but they didn't really have to pay tariffs on that right away. And once the tariffs have been implemented, then those costs will start to rise and it will start to be pushed out to the consumer. And we saw that happen with a couple of names. We saw, and then it all has also led into decreased consumer spending. You can see the two big names that I would say kind of reflect that was Chipotle and Kava, which both took a big dump after their earnings, citing the fact that, consumers are just not coming out. They're not going out to eat anymore. They're uncertain about the future and ultimately are waiting to see what's going to happen. And people are not spending in that manner. One of the big ones that happened earlier today too was if you take a look over at TGT Target, it is kind of recovering right now a little bit, but not, it's still down overall. It's still down 5, almost 6%. We saw Target report, and Target did technically have a double beat. It was just almost pretty much in line for earnings, the EPS. Revenue came in and beat by 1.1%. But Target took a big dump this morning and went down, went 10% in the morning, citing that, again, consumers are just not spending like they used to. And a lot of that has to come with, fears of what is about to happen with the economy. People start to tighten up their budget when things are uncertain and, when money's a little bit harder to come by. So with that being said, we do have Walmart about to report later, actually tomorrow, right? Tomorrow morning. Hold on. Let me double check that. Yes, tomorrow morning. Thursday morning, Walmart is the big name that everybody's kind of looking at. And a lot of stuff is actually going to be riding on that. We also do have tomorrow after close, we got Zoom, Workday, INTU, and Ross stores. And you can imagine TJ stores, TJ Maxx stores are going to be a little bit related to that Ross report as well. Now, what's interesting to me is actually Walmart didn't actually drop compared to Target. This morning, yes, after the Target report, you can see it kind of dropped as well, but it's recovered pretty nicely compared to that. But if the sentiment, the consumer sentiment, in terms of Walmart is going to be similar to Target, I could definitely see them potentially drop after their earnings, even if they do have a slight beat. They would have to definitely beat the numbers by quite a bit for this name to go up further. Another thing to consider too is Walmart overall, they've been doing pretty well with earnings. A lot of beats, a couple of misses here and there throughout the years, but the general idea is that they usually will be beating their earnings with the numbers that are reported. But let's quickly jump over into Stack, see if we can find any plays for you guys for the upcoming, before we go into close. Walmart. And I also wanted to share this with you guys too. We're going to peek over at WaveX. Go ahead, Max.
They spent $1 million to redesign their logo.
Yeah. I mean, only $1 million.
And it's the same logo, except I think it's now rounded edges instead of corners.
Yeah, that happens from time to time.
I feel like that was embezzlement, but
let me show you guys. So, okay, Walmart, we have a new tool. It's something similar to what TraderLink has. That's why we went through the merger with them and acquired TraderLink most recently. We've got this on deck. It should be released in very, very soon. Stay tuned for it. Thank you guys for your patience. But we do see Walmart here, and there's 3 lines that are being charted here. Let me move our zoom behind it so you guys can see the full thing. Okay, so WaveX, you've got 3 lines. You've got the premium for overall down on the bottom, so you can see when premium for the calls were higher and when it dropped where the premium for the puts was higher. And then on the top, you have the yellow line, which is going to be the price of Walmart. So Walmart, you will see how back here in the beginning of the day, 10, 15 minutes into open, we see that green line suddenly shoot up above the red one. And we actually do see the price of Walmart go higher. Then you see it start to kind of chop around. It breaks back below, and it's kind of just fluctuated back and forth. You'll see a little bit more red down here where Walmart took a little bit of a dip from that, and it's kind of just chopped around since. It shot up early in the morning when premium for our calls went up higher, but as of now, it's kind of just around in the middle. So overall, premium is starting to look a little bit more bearish, but not so significantly that I could make a full call on that right away. On the other hand, let's go ahead and take a look as to see what they're buying. As of today, we do have some puts. We do have some calls. Kind of even in terms of the urgency. We have Walmart puts for next Friday. The $100 call, $100 puts for $159,000. They bought 1,000 of those contracts, and then they also have calls for this Friday for the 103. So the thing about it is, while those are out of the money, they're not so significantly out of. They're only a few percent points out of it. So I don't really think, I think it's a question as to what direction this might move after hours. It is one of those things where, when we look at stacks and we're trying to find out what direction something might go for an earnings call, you tend to see a lot of buying in a certain direction for extremely far out of the money. So, keep that in mind. It's one of those things where, as of right now, this just a few percent, 2% down, not even a full percent up is what they're aiming for. And then also the time frame, the expiration dates, the only two that are close to today, these two, 8/22 and 8/29, they don't really give too much of an idea of what direction we're headed in. The buying for Walmart as well, in terms of the equity, you can see on the right side, 805 was the last time, so 2 weeks ago was the last time they purchased around $99. 105 mil being bought a couple of times in there, and then on the 4th, right under 50 mil, 1, 2, 3, 4, 5. So, usually for a name this big, you would want to see hundreds of millions of dollars being spent, and also close to today as much as possible. Then if we go ahead and peek over at Politician Tracker, we do have Lisa McLean buying, but the amount was between $1,000 to $15,000. Purchased back in June, actually. Josh Gottheimer sold a little bit as well, but nothing in terms of huge premiums. We do see here back in May, Jefferson Shreve sold over $100,000. That's the bigger number that we see here. So in terms of Politician Tracker, nothing so significant in terms of that. Looks like Jefferson Shreve also closed his account in that situation. That's why it was so much sold. Insiders are all sells. We did see the executive vice president sell $166,000. Yeah, a couple of the VPs have sold, but these are small amounts, not too much. President CEO sold 1.8 mil. So, like we said, leaning a little bit more bearish on Walmart just because of, more so on that macro, on the economic side of things, has me thinking that we might see a drop after the earnings, but maybe not too huge of a drop as, some people are expecting, maybe 5% or so. It would be surprising to see it drop 10%. That would probably mean that their outlook for the economy isn't too great. So we'll have to see that. That won't be reported till tomorrow at open, tomorrow at open. So we won't be able to really watch too much of that today. The other names that we have reporting after hours today, I don't really think any of us have too much interest in them. Nordson Corporation, America Airports, BBVA, COTY, Ascentage, Telix, Unify. So not really names that I would say are huge indicators of what other companies are about to do. Now let's peek over at Thursday. Zoom, Workday, Intuit, and Ross which means I would like to take a look at how TJX reported today. Let's pull that up. So TJ Maxx companies, they reported a beat, 8% beat on earnings or EPS, and then revenue beat by 1.8%. They shot up. With that, they broke. Is this new all-time highs? Real quick, yeah, it is. It looks like it's new all-time highs. TJ Maxx, and so what does this actually mean? So you can kind of lump some of these retail stores together, where you have your general retail, which is Walmart, Target, you know, the you know, even Amazon can be considered that as well, where that's the basic spending. Then you also have ones like Dollar General, you have TJ Maxx, you have Ross stores, which are going to be your discount stores. One of the things that did happen over the course of, you know, after COVID, we saw a big pump, you know, huge pump into the markets where a lot of people were spending. They got their stimulus checks. A lot of money was flowing into the markets, into our economy, and everything went up. But then what ended up happening was people started to struggle. There was more constrained spending. We started seeing, you know, a lot more money being spent at these discount stores. So TJ Maxx having this pump could potentially lead to stores like Ross possibly seeing this pop up above this 150. We could start to get to 155 and potentially retest that 163 would be what I would expect, you know, at least with that type of a report here. And that would be new all-time highs as well for Ross stores. Let me draw that out for you guys. So those would be my targets on the upside. On the downside, down below 143, we have some support a little bit lower at these other ranges too. So, yeah, I mean, as of right now, you guys tell me, do you guys feel that consumer, you know, have you cut back on, you know, spending and expenses? You know, things have things gone up in price? Are you noticing inflation in your area? These are things that we like to get a little bit of a gauge on on our side. And I will say, while yes, you know, cost of eggs have gone down, I do know that overall it is one of those things where I kind of do expect that things are going to go up in price in due time. And it's one of those things where, you know, I mean, I cut back on, had a baby this year, so I cut back on spending on basketball shoes a little bit ago to prepare for that, to buy diapers instead. But, you know, it's one of those things where, you know, how is the general U.S. economy doing? I think a lot of people are, you know, a little bit worried. Jobs are not being added as people are having trouble finding jobs. I heard a lot of people were looking for jobs and going through interview processes for months on end, being kind of played around by some of these bigger companies and still not getting those opportunities, even though they were well qualified. So, you know, there is a lot of turmoil underneath the surface when you go look a little bit closer with how the economy is acting. Yeah. Mm-hmm. Hold on real quick. I don't know why I don't no, well, it's on my end. It was working and then all of a sudden disappeared. Here's Zoom. Give me one sec, guys. Let me figure out why Zoom suddenly went inactive on my end. Yeah, that's really weird. I can hear you, but that's just on my side of things. Here, let me see if I can re-add it. No, it's not coming back up.
Oh no, they
there we
can't
go.
hear
There
me.
we go.
Oh,
There we go.
all right. Cool.
Let me remove one. Okay. Sorry, go back and go ahead and say that again. You said about TJ Maxx and, you know, your shopping.
Yeah, I mean TJ Maxx is just cheaper for like just basic stuff like underwear and socks and like even random like
One
food
sec, one sec.
snacks. Oh.
It's now doubling up. What is going on here?
What the heck? Did someone hack our stream?
I doubt it.
Hey, you know, out of those 7 people, one of them could be an internet sleep.
Go ahead, try real quick. Okay, so that's just, okay, that might just be me here. Okay, so let me do this. Yeah, I think it's because I have you on Zoom here too. I don't want to mute you though. Alright, I'll just deal with the double. It should be fine on your end though. Or it should be fine. If you guys are listening and you hear a double echo, let me know, because I can't tell what exactly is going on in stream. Go ahead, Max.
Yeah, so but yeah, TJ Maxx, Ross. I mean, I'm even seeing like more foot traffic in those stores too. Like it's starting to look like Walmart lines at times. If you go like during the day or back to school or anything like that, people aren't really going to Target. Like I remember Target and Walmart or Walgreens were like one of the 3 places you would go to get back to school supplies, like your folders and your pencils and all that stuff. But it seems like bargain stores are becoming more of the staple. And with Walmart, despite them saying they could be prone to inflation because they're so large, it's shown that they can't because they've been steadily increasing prices over the last couple months, but not really informing consumers. So that's why you're seeing Walmarts with less and less foot traffic because, well, it's Walmart. So unlike Target, where they announce they're going to increase prices, Walmart is just going to increase prices and hope you don't notice that you're paying like $2 more. But if you're shopping at Walmart, if you're spending 50 cents more, you're like, what the heck what is this all about? I would just go to the grocery store, you know? So it's just one of those things where I think with the state of the economy in terms of just people, like today it came out, you need $115,000 to afford the average home in America. Like you need to be bringing that in as household income, if you want to afford to buy and live in a house. So it's just things like that. And if that's the case, I can tell you right now, what's the average job paying? Probably like 45K, 50K. So you're already $65,000 under the poverty line. So you're going to look to cut anything out or take any shortcuts or get any discounts or deals. So it's a really tough time for any retailer, really. I mean, Ross and TJ Maxx, my only thing would just interest would be like, all right, what's going to happen in the long run? Like what's your future is your future projection strong enough to keep your stock price increased over that time, you know?
Yeah. I also, one thing I was noticing too was there were some videos popping up on social media showing how companies like Walmart are actually preparing for a bit of the tariff impact, where they're going in on the T-shirt and the shirt, you know, the clothing tags. You know how there's always a price on the bottom of them. They've been ripping them off, and then increasing the price on the display instead. So it's one of those things where, you know, the prices of and the impact of these tariffs are going to start to finally show in these next upcoming quarters. And consumers are already feeling it in their pocketbooks. And I will say too, as well, I love going to TJ Maxx and Ross and kind of browsing. I definitely have plenty of clothes, but at the end of the day, like every now and then, you'll find a shirt or something that's nice. And I used to go and check out, what kind of basketball shoes that they have that are either, old stock or B grade that you can kind of get off of the shelves over at Ross and TJ Maxx. And I will say foot traffic in those stores tends to be decent. I would say there's still people, walking around buying there. And I would, I haven't been to Walmart in quite a bit, but, I would keep an eye out to see, hey, do you see, is the foot traffic slowing down there? And with people expecting that prices are about to rise too, are people cutting back on those types of expenses? So
100%. Well, the big headline with Target was consumers are opting to like eat at home more often.
mm-hmm.
And go to more grocery type stores versus like I go to the Habibi market and Asian market more than I go to the regular grocery store at this point, because at the end of the day, I don't know how, because I know they have to import all of that food because it's like real. But they somehow have it priced cheaper than if you were to go get like the American version out here. We have Meijer and Kroger. It would be like Albertsons
mm-hmm.
and Safeway for you guys.
Yeah.
So it's interesting because I like went to Meijer with my mom the other day, and I was like, this is like the first time I've been to Meijer in like 2 months. She's like, where do you go? I was like, oh, well, there's like a market down the street from me, and then there's the 99 Asian Mart that's like a couple blocks away from me. And I was like, and most of the food I eat has that stuff in it, so I just get it from there because it's cheaper. Like,
Yeah.
I can go get Thai noodles for $2 and get like a big clear plastic bag of them, and it lasts me like a month.
Yeah.
So why would I not do that if I bought that many at Meijer, because they don't sell a big plastic bag, you'd have to buy like 5 of them. That would cost me like 15, $16 for the same amount of food, by the way.
Yeah. I mean, you can kind of look at it as the different tiers of grocery stores. You got your Ralph's, your Albertsons, your basic stores, and then you can kind of lump in, sometimes I'd put Walmart into that as well, Target as well. Then you go into what you can consider cheaper, and there's over here in San Diego, there's 99 Ranch, there's Mitsuwa, which is the Japanese market, there's Zion Market, but you can almost tier them a little bit in different, if 99 Ranch is kind of the standard, the regular consumer, Zion Market and Mitsuwa tend to be a little bit more expensive in certain areas. And then you also there's this, it's a Vietnamese one over here in Mira Mesa, where it's actually a little bit cheaper. It tends, when you go look at their produce, they tend to be the one with a little bit more blemishes and things like that. But the produce tends to be cheaper. And I will say, like, since COVID and since all this money printing that we've had, prices have gone up across the board. But they're still, they're still cheaper. If I'm going for some of that produce, it's still usually going to be cheaper than trying to get it at Ralph's or, an Albertsons, a Vaughn's type of store. So, just something to keep in mind. Always be aware of what the foot traffic looks like when you are out there, doing your shopping. And that can hint into how the economy is doing. And something today I want to point out too. A lot of people are talking about, oh my God, it looks like, the market's tanking. It's going so far down. Guys, since the top that we saw on the 14th, 15th, and I'm thinking that was overnight, SPY is down like 2%. All right.
Yeah.
I'm in a couple of these discords where people are like, oh my God, the market's crashing. And I look at the thing, I'm like, dude, it's down 0.5% overnight. Like, you guys are kind of freaking out over nothing. Right now, it's kind of just, we're just waiting for, the real decision from the Fed. And it does, like we said, it does look like they're probably going to hold rates steady and wait a little bit. There is a lot of expectation. I will say the September rate cuts was basically an expectation from the polls that we have. It was close to 90, almost 95% or something. It's dropped now to, I think, 80 something percent. 84% was the last number I heard. But with the Fed report saying that they very likely will actually stay and hold, um, I think it's part of it is the PTSD that we've seen from, the previous years when we did cut too early, and we're kind of paying for it now. But
Hmm.
it's interesting because it seems as if overall the markets don't really care right now. The markets are still continuing to move in the direction and continuing to move up. But part of that also has to do with monetary policy. We are starting to see, the quantitative easing starting to creep back into the markets. We're starting to print money again. Again, our debt spiral that we're in is only making things worse. My wife was asking about this yesterday, and we just hit $37 trillion of debt. You know, Congratulations, guys. We finally broke 37.
Woo!
But it's a problem because with the current servicing of the debt that we have, just a few years ago, I think our yearly debt was, or the yearly interest that we were spending was like 300 mil. And as of right now, it's closer to a trill. So every year we're adding $1 trillion more debt onto it. And we're not making that money from our taxes and from other things. I don't care how many of those gold cards we sell for other people to come into our country. We're not recovering that debt at this point. The only way, and history has also shown, is that the only way that we get ourselves out of it is to print more money. But if we print more money, what does that in return lead into? It leads to more inflation. So, you know, why is it, my wife asked, why is it that every man thinks about Rome? Well, history doesn't necessarily repeat itself, but it often does rhyme. And right now we're in a situation that is very similar to previous situations that we've seen. Other previous huge economies have put themselves into a debt spiral as well, and it's also led into these types of, economic dynamics where again the only way out is to print more, but it's going to create more inflation, and it's going to create, a situation where people are actually very unhappy with it and can lead into situations such as, civil war and, rioting and things like that. So um, also
Well,
interesting too was I heard some, they said the revolution will not be televised. Apparently there are some protests going on that actually are not really being shown in traditional media, that is being hidden under the surface at this point. And I think again it's one of those situations where people are starting to feel the impacts of all of the policies that are being put in that are limiting the way that we live.
historically too, most dynasties and like world dominant societies, they only last about 250 years, and I think we're in year like 249. So they like people are like, well, and to your point, I don't think people remember the stuff we've gone through in the last 2 years, like the debt ceiling thing. People are like, "Oh my God, that's so shocking." I'm like, "Is it?" Because 2 years ago, we were at a point where if we hit our debt ceiling, I think it was like at 34 trillion. They were like, well, if we come in above 34 trillion, we won't be able to pay our bills, and then we will go into like a real economic like 2008 type recession. And they're like, but we can't raise the ceiling again. Like we literally can't afford to do this. So then weeks go by, you hear nothing, and then like literally 2 days before they have that meeting where they have to pay their bill, they raise the ceiling by $2 trillion to 36. And then we hit 36, and then every time we have this meeting, they go, we can't increase the debt limit. So what do? I think this year instead, they rolled out a Venmo and PayPal solution. So us, who are currently giving the government money already, we have the option to tip the government, just in case that we're so satisfied with the amount of tax that we pay that we'd want to, pay a little extra to say thank you for allowing me to take home less money.
It's like mom and dad racked up a bunch of credit card debt, and then they're looking at their kids, going, "You want to tip us? You want to pull out your piggy bank and help us pay off some of the hundreds of thousands of dollars that we've accumulated." So at the end of the day, it's crazy. Them asking us to pay off that debt. It's you can see what kind of a predicament they're in, and as much as the media is kind of pointing fingers at Powell, I want you guys to
Trump.
understand he's actually, Powell's doing his job. He's actually, out of everybody, he's actually one of the only ones that is looking into the future, trying to help us make sure that we don't destroy ourselves completely. By holding rates steady, it probably is the right move if we are able to at least, use the data efficiently. Now, I will also point out one other thing is we haven't had reliable data. A lot of the data that we're getting, it's being gamed. It is, you know, CPI and inflation numbers. Oftentimes, they look at the numbers and they weigh it differently and have the ability to change around. As with mathematicians and economists, they are able to take those numbers and use it to create a narrative. So it's kind of like, okay, well, even though inflation for insurances has gone up significantly, we're gonna weigh that less because technically they only you guys only pay that twice a year or something like that. The revisions are kind of, and one thing I found interesting was the revisions to the job numbers. Technically, if they had come out with the numbers as the months went at, basically they went back to revise, they took away 250,000 jobs added from the previous months. If they had actually released those numbers the way that they actually are now, there is actually a higher chance that Powell will look at it and say, okay, the data is showing that employment is, we're struggling in the jobs market, we're not achieving maximum employment, we might need to cut. So I thought that was interesting where this revision now kind of makes it go, well, now you're acting too late, now you're not doing your job properly. But it is also another situation where, well, the numbers that he was given, he made the right decision with the numbers he was given. The revision of those of that job market now kind of makes it look like he is a little bit late to that party, but ultimately he's making the right decisions with what information he's got.
I don't I I listened to that. I listened to the Fed minutes last year, these same ones when we cut rates in July. And when I tell you, literally 75% of the Fed came out and was like, well, that was fun, but I think we got a little carried away there. And I just don't trust rate cuts at this point because of the fact that, like, that's that's why I think they're going to take the flex policy away. Like, it's, oh, we're going to do it to save labor, or we're going to do it to fight inflation. It's going to be like, no, we have to be at 2% inflation if you want to have a rate cut. No ifs, ands, buts about it, because we need something to essentially collapse. Like, that's just where we're at. Like, something has to collapse. Like, you're on a bridge, a bunch of fat people keep getting on, and you're like, okay, we're about to hit this weight limit, and the bridge is gonna snap. I hope you guys can swim. So it's just, we're at that point where something needs to break. Like, people are going, oh, well, watch when they cut rates in September. We're gonna see 5% mortgage rates. The fuck we are. 6% to 6.5% is like the COVID 2%. Like, that is what that is. And also, fun fact, they have nothing to do with each other. So, like, we cut rates last year and mortgage rates went up. So explain that. I mean, it's just, I don't think, like, Powell's doing his job, but he also tripped up at some point in his tenure that has put him in a perpetual game of catch up, which kind of sucks because he's just been stepping in shit for the last 4 years, it seems. And now it's like, he's got so much shit on his shoes that people can't really trust what he says. And then on top of that, it just makes it look like he's not doing anything. And the reason the numbers have to be revised is because they're trying to avoid the same mistakes we made, i.e., cutting to protect the labor market when, like, it ended up not doing that anyways because they cut too much. So it's just, that's why I think the revisions are more aggressive this year, because last time we had a cut, we cut without revisions, but then when you dug into the meat and potatoes of those numbers, um, like it doesn't, it didn't add, like the math didn't add up at the end of the day for that move to be made, and we're in the same exact spot we were last year. And that's the crazy part. We had 85% odds going into September, the whole nine, whole same setup, except we're a month behind this time. So I feel like we're just gonna see the same bullshit happen we saw last year. We're gonna cut too much too fast, or Powell has the chance to do the most legendary thing ever in hike rates on his speech, which I think would be the best idea for protection of capital from the U.S. government at this point.
Yeah, it's one of the it's the hard decision that needs to be made, but it will be best for the long run. But again, they're in such a, they've dug a hole so big for themselves that, you know, we're never going to fill that hole back up. We're never going to get ourselves out of that situation. But the issue is making sure that hole doesn't continue to get bigger, because it's only going to create bigger problems at the end. So, well, I mean, it is what it is. It's the situation we've been in. I'll tell you, over the course of the last 3 to 4 years, I feel like the narrative's kind of been the same. Is we got to raise the debt ceiling. We're in too much debt. The debt's only going to get worse. Looking to people to save us in that situation, and whatever we end up doing, it just continues to raise our, continues to raise the debt that we owe, continues to make it worse. We continue to kick the can down the road, and like you said, until something breaks, we probably will continue to see a lot of our asset prices continue to go higher. But everything in an economy is cyclical, and when it does break, it's going to break pretty hard. And it's not going to be pretty. There's going to be a lot, there's going to be jobs lost. There's going to be inflation. There's going to be a lot of issues that you and I are going to be the ones that have to face it more so. But it is just, it's part of the way that history and these large economies work. And so another part too is the thing with the BRICS nation too. They're starting to use other currencies other than the dollar to trade in, and it's starting to become a bigger and bigger issue, and it's starting to devalue our dollar more and more. But that's part of that's just part of what it is. We got a question about PDD.
Ooh, some China betting going on here. Playing some Chinese checkers in the afternoon. Oh wow, that was a pretty little spike up to that, like 120, 129. That's complicated to say, but I mean, only a 0.9% loss on the day. It's not bad, especially with what we've seen with PDD. The one thing I've noticed, I have been tracking a couple unusual PDD stats flow callouts. Most notably, the last one I'm in are the 140s. Yeah, 140s due for 12.19. I added these on, to give you perspective, I added these on 6/24, so June 24th, at a 278 cost average, and they're currently up 61% at 450. But if we go back to like the 1 month, these things peaked so far at 735 on July 23rd. So in about a month, they saw a nice return there. But they're definitely you got to play the pops and the fade, and then you got to play the fade and protect your capital and get it. I've noticed there's multiple entry points. I feel like within the options flow, like you'll see it go 100%, and if you just wait for it to come back down, you could hop back in and ride it right back up in about a month.
I will say for PDD, a lot of the flow, at least the unusual and the big money flow, tends to be pretty bullish.
Mhm.
But what's moving the markets right now, I think, is just waiting for the final Fed decision of what's about to happen, and their outlook of the upcoming months. Just because there were such high expectations on rate cuts, and now there's the talk of holding it steady. PDD, I think, all the stocks are going to be subject to it. So PDD right now, it's still looking fairly strong. It needs to bounce off of this 117 range that we're coming back down to. But the last few days, obviously, everything's sold off. So this is normal movement compared to the rest of SPY and everything like that. It's been having trouble breaking up above this 121.50. You can see it's tested at 1, 2. You call that 3, 4, 5 times basically. It's tested this little range. If it does break up above this, you could definitely see it come back up toward, that 124, 125 range and retest those ranges pretty quickly. But I've already charted this out for you guys. A lot of China stocks are starting to look like they're going through some form of accumulation. It just needs that push to go up higher, and I do think that's going to be linked to some sort of announcement where they release some sort of stimulus for their economy. That's going to be the best way to see this take a big drastic shot upwards, because at the end of the day, all the big economies right now are struggling to some extent when it comes down to all the money that was pushed into our systems when it came down to money printing from COVID and things like that. Yeah, I do think this bull flag will continue. I wouldn't be surprised to see it come down just a little bit. But keep an eye on stacks. That's kind of, that's what we like to do, is see if we end up seeing continued buying in the name, or if they start to sell off on it. We are in this pretty significant uptrend too. And if you at least go down to this recent drop, until it breaks this uptrend, you can kind of expect it to continue bouncing upwards and to retest that 121.
And on stacks, I always like to see when a stock is like going down, to see calls coming in, because then in my mind that means it's just making higher lows for it, or higher support levels in a sense, for it to bounce off of potentially. So that's another thing to pay attention to, is like the spot prices that you see these big contracts come through on. You can kind of look at those as like almost supply and demand zones, where it's like, oh, this is where a lot of people are starting to step in and buy contracts. Okay, this is an area where we're seeing a lot of people start to sell puts or sell calls. So that's another thing you can do with Investor Central Club, is pay attention to the spot. And if you see multiple prints over the span of a week, let's say, that's a great area that you can essentially create as a magnet. So you can say, okay, well, if I see price come down, we're currently like $5 above it. So I'm going to give myself this $5 magnet where I think buyers will step back in, because that's the last time we saw bullish activity.
Yeah. Another thing too is, guys, you make sure you guys use a flow scanner. The reason we put this tool together is it very quickly helps you gauge where that sentiment is headed. For example, if you just remember, it always filters for just the week. So Monday through wherever you are today. So today's Wednesday. We did see a lot of NVIDIA come in, so it's leaning a little bit more bullish. There were millions and hundreds of millions of calls that came in. But for example, you always want to take a look as to the premium and compare it. Think of it as a fraction. Puts to calls. SPY over the course of this week has been extremely bearish. And what do you guys see? SPY's dropped, right? I mean, obviously it looks like a big drop on the graph, but really, it's only really 2% since the highs a couple days ago. But SPY, we see 92 mil to the 19 mil in calls. QQQ is basically double in terms of puts to calls. IWM here, 53 million puts to 4 million calls. Okay, those are situations I want you guys to be aware of, because really it's starting to show that there is a lot more hedging going on. There's a lot more bearish sentiment coming into the markets. Palantir even almost 30 mil to about 16 mil in calls. So they're leaning bearish right now, especially with the news that's coming in. Then I like to go in here and hit equals, filter for the day, and it quickly revises it just to show you what happened today. And one of my favorite things is go ahead and hit puts here, and it's going to filter for everything that's got 0 puts that were taken out for today. Now, obviously, if it's only a few $100,000, those are less to consider. But you can even see here, PDD does have $500,000 of calls to $0 of puts, which does lean more on the bullish side. Here's something interesting. We've always talked about this. GLD, the gold ETF. It has $700 million calls to 0 puts. They're starting to go into a little bit more of safety. They're starting to move away from certain risk assets, and they're starting to put their money into the things that they know if there is inflation, these are things that are almost, basically guaranteed to rise. Gold will go up if inflation starts to bite us again. So, keep in mind, PCG, that was one that we've been in, 2 mil to 0, right? So, energy and things like that, a little bit safer in the rotation of the markets. IonQ, VXX, that's the VIX, right? Riot, McDonald's, GV, TLT. TLT is bonds. So, remember that. Filter, use the flow scanner. If you guys are in stacks and using this, go ahead and share it with the Discord. Share it with what you're looking at. That way everybody gets in on that conversation, especially because, again, we're all looking at different things at different times. But, that's what we put this community together is, we're all in the same boat. We're trying to make money. We're all trying to achieve our own different definition of what financial freedom might look like. But, that's what I love about our community. We're all here to help each other out.
Also, I have one thing to add to the flow scanner too. So sometimes, like when I look at it, it can be deceptive in the sense where if you're like, oh, the most hit contracts, and then you find out like when we see QQQ had like 280 million in flow in a day, but then you look at it and you're like, oh, well, it's because someone bought 280 million worth of calls that were like $14 on an average. So sometimes when I'm like, okay, there's like just a bunch of big contracts out there kind of thing, I'll go to the volume side and see, okay, where are like the most contracts being traded? Because then that's where you'll see a mix of retail, and then you can also see like if institutions are also stepping into those positions as well in terms of the most frequently traded or whatever has the most volume behind it. Just because sometimes like when I alert you guys on some of the unusual flow that we see, I'm not expecting you to get into it because it's a $20 average. Like, I don't think you have $2,000 to go blow on a position and wait for a 4-month return, because that's what those guys are about to go do, and they're going to hedge against it the entire time with the rest of their portfolio. So they're not really losing money. So one thing I've always done is just like compare, okay, what has the most money? All right, what's eating up all the volume? If I'm looking for something that's more like intraday or a swing, whatever the case might be. So that's another great way you can use flow scanners. You don't always have to relate things to dollars. Sometimes volume will be that pressure point, especially if you're looking at contracts that are sub like $1 average, I would say, especially. Anything that's like from $1 to 0.01, you could probably go more off volume than premium spent, because the premiums aren't going to be anything negligible to what like a big hedge fund would potentially drop.
Yeah. On the flow scanner, you can always go under the most common contract and actually click that. And what it'll do, it'll help you filter and take a look as to what exactly was being purchased. So just easy ways for you to go in and actually analyze what it is that's happening, so you can actually peek over as to what actually happened. So again, use the flow scanner. Once WaveX comes in, it's we've got our sights set for the upcoming weeks, so be ready. WaveX will be ready for you guys very soon. You can also use that to gauge what's going on with the markets, and obviously use it as a tool to help out and gain an edge in your trading. So, all right, that's all I had for you guys today. We will discuss in our Discord tomorrow what ends up happening with Walmart. Like I said again, leaning a little bit more bearish, but there wasn't so much flow in our um, in our charts that really let us make a uh, huge decision. Do you remember on CNBC the live the Teo brothers used to say big trader called 50 cents always shows up? No, I haven't been watching CNBC live, so I wouldn't know.
I know
Maybe
50
somebody else.
Cent.
Yeah, I know who 50 Cent is, but
That's who
that's
I thought
different.
it was at first. I was like, wait, they talked about 50 Cent on CNBC? No wonder we're. I mean, they just brought Drewski on Bloomberg, so
Yeah.
I'm not shocked that the market's about to get corrected real hard.
Yeah. Well, yeah. I think I saw Kramer basically called the top, said he was going to
Oh
buy in
my
Palantir,
God.
and it dropped immediately after. So if you're inverse Kramer, you're probably doing pretty well right now.
Dude, that was he was like, it's not even gonna flinch and be at 200, and it was at 144 literally like the same day.
Yeah, exactly. So
That man is a grifter.
inverse Kramer is a great tool to use as well, guys. But like I said, keep an eye on stacks, keep an eye on the flow. Continue to have a conversation with us. If you're in our discords, you can always ping me or Max. My tag is eRoo, his is unusual markets. You can always try to have a conversation with us. We will keep in mind we will never reach out to you directly in a DM. We have had a couple of scam accounts trying to get people to do copy trading and send them money and things like that. So keep in mind we'll never reach out to you asking for any of that. But you are always welcome to message us if you have any questions. And as always, we will be doing these on Wednesday, every Wednesday, about 30 minutes before close. Sometimes if there's a lot of earnings, we might jump on a little bit earlier. We'll always peek over as to what the rest of the week looks like for earnings and make the decision based upon that, whether or not we're going to go live as well. I had somebody ask me yesterday if I went live, but I was busy with the baby, so didn't have a chance to jump on, and there weren't too many earnings for us to go over as well. So, all right, we will see you guys again very soon. Thank you guys for joining us. Be sure to smash that like button, and we will see you guys in the next one.